Hello everyone, this is PriceAction Ltd and we are back with another breakdown video, and in this video we're going to explain how we took the Aussie USD trade that was sent out in the free channel as well as in the VIP channel. So without any further ado, let's get right into it. So the number one confluence for this particular trade was that higher time frame was important for this particular trade because price was in a high time frame important zone, and if we just go on to the 4-hour time frame, we can see that price was in a very important supply demand zone, and we were expecting some kind of reaction from this area. So yeah, this is one of the confluences, and we were obviously looking for a selling opportunity provided that we had enough confluences to support our bias. So moving on to the next confluence. Okay, so confluence number 2 was the fact that liquidity grab area was being retested when we entered this particular trade. So what do we mean by this? Okay, so if you see precisely right around this area, price created a high and started moving down. So and this movement down, that was right before a London session started. So you know, as soon as London session started, people thought, okay, so this consolidation is broken and price should now continue downwards. So a lot of people started selling, and what happened was price moved the other way and grabbed a lot of stop losses in the process. So a lot of retail stop losses were hunted, and when this took place, people thought, okay, so now the resistance, the retail resistance is starting to break and price should go up. So they started buying, and their stop loss was in this area, these areas, and that was grabbed too. So what happened in the process was you know, retail traders got trapped and a lot of liquidity was grabbed here. And what price does is price comes back to these liquidity areas, retests these areas, and then moves the intended way. So as soon as we saw that this is a manipulation zone, this is a fake out zone, or this is a liquidity grab zone, and price moved down and then went up again to retest this area, we knew that this was a point of interest. So that was our confluence number 2 for the particular trade. So moving on, confluence number 3, that was lower low break of structure. So what is a lower low and what is a break of structure? So when price trends, it tends to move in a certain pattern. So that certain pattern is higher lows and higher highs. If price is bullish, price moves with higher highs and higher lows. If price is bearish, price moves in lower highs and lower lows. So what we noticed was the fact that, you know, from a very important higher time frame zone, price first manipulated, then went down, and then broke a low. Prior to that, price was continuing to create a higher high and a higher low, higher high and a higher low, and this was the first time that price created a lower low. So that indicated that if by chance price manages to create a lower high, then there is a high probability that price should continue downwards to go for a lower low. So as soon as we saw that there was a lower low forming in the 1 hour time frame, we classified that as a break of structure, and we were looking for a lower high to be created, and that lower high was our very entry. So that was confluence number 3. So moving on to confluence number 4, and that is time. Yes, time. So each time we enter a trade, we make sure that the time is adequate, and we enter at a time when there is volume in the market. So we managed to enter during the London session beginning, and we know that there is a lot of volume at that time. And yes, time was another important factor for any trade we take. So yes, time is a constant confluence for us. Moving on, the 5th confluence is price divergence. So what is price divergence and what we mean by price divergence here? So if you've been enough in the trading scenario or in the forex industry, or you see charts regularly, you may notice something like this. So this orange line right here, the orange price chart. Okay, so this is the price movement of Kiwi dollar. Okay, so this is the price movement of Kiwi dollar. So if you notice carefully, you will see that for a lot of times the price movement for Aussie USD and Kiwi dollar is kind of similar, right? And each time one creates a higher high, higher low, the other creates a higher high, higher low, and vice versa. But for this particular trade, what happened is we saw that NZD USD or the Kiwi dollar, it did create a higher high, but Aussie USD, it could not create a higher high. it created a lower low. It was failing to create a higher high. So that signified that Aussie USD was actually getting weak compared to NZD USD, and that is another confluence that we had. So we had a significant piece of confluence right around here. The fact that there was price divergence in the charts for Aussie dollar versus Kiwi dollar. Okay, so moving on to the next confluence, which is a very special confluence. Moving on to number 6, and the last confluence we had is the price action secret indicator. Okay, so before you know how it helped to form our bias for the particular trade, you need to understand how does this indicator work. Okay, so in simple words, what this indicator does is identify a fake breakout. Okay, it identifies when a breakout is fake. For example, right here, okay, so retail traders could have drawn a zone like this, and as price broke this zone, they went into longs, right? They went for longs. So there are times when these concepts work too. I won't disagree, these concepts work too at times, but when should you know that this is not an actual breakout, but this is a manipulation, this is a fake breakout, and price will reverse the other way. So our indicator indicated precisely that this was actually manipulation, because price created a higher high, price broke the resistance zone on the left, but on our indicator there was nothing of that sort. Our indicator failed to create a higher high. Our indicator indicated that this higher high break, that was actually a fake breakout, and we should look for sells instead. So what happened next was price continued to go down, created a lower low, and then went up during the London session to create a lower high. And as soon as we saw this divergence right here, that here's a higher high, here's a lower low, and we knew that this buying pressure actually was not real. Actually there was more selling pressure from the very beginning. So we knew that this was a manipulation zone, and as price was retesting this zone, price should continue downwards moving on. So that was the final confluence that made us pull the trigger and made us enter the trade. And yeah, so this is how we crafted that free signal, and that free signal is was more than 50 pips in profit just moments ago. So yeah, this is the kind of expertise that we put into every single trade, and this is the kind of expertise you will have access to if you decide to join our VIP channel, or this is the kind of decision making help you will get with our indicator. So either way, if you have any questions, any feedback, any suggestions, just reach out to us, contact us through any platform, and see you on the next signal breakdown video. Till then, happy trading. Goodbye everyone.